Berkshire Hathaway shareholders are gathering in Omaha, Nebraska for the annual meeting. I run into investor Mario Gabelli, who joins me now. So good to see you.
Rhonda, my privilege.
Now, tell me what the one question you'd like to hear answered tomorrow at the shareholder meeting.
Well, there's no such thing as when we connect dots in what we do. In analyzing Berkshire Hathaway, you have $11 billion, $11 billion of EBITDA operating profits from their businesses they own, plus the insurance business. So we want to understand how is he going to grow those values and where is he going to put his money to work. Others may want to be interested in corporate governance. You know, Warren said he has a minor health issue. He's going to tell his board who he has appointed. And so the video in the morning will show us little tidbits and insights into that.
Are you concerned about secession at Berkshire Hathaway?
No.
Why not?
Warren's a sprightly young 81. He chases after anything business-wise around the world, and he's very active. Just think tomorrow how long and 3 days of this kind of stress and this kind of intense interest. More importantly, he has a team of Ted and Todd with regards to the money management, and he's identified successors with regards to the business. And more fundamental than that, the stock's selling at $120,000 per share, and it's worth at least 50% more than that. So there's a margin of safety in owning the stock, and the successor will do what other companies could do, and that is split it up, do a variety of things.
Do you think the overall equity market is undervalued in any way?
The equity market in the United States?
Yes.
Oh, there's a lot of speed bumps, potholes, short run, concern over the second quarter, the absence of Operation Twist, the fact that we have these recurring issues in Europe and Euroland, and then obviously the United States has an election. And you have what they call the cliff with regards to fiscal dynamics that occur in January, and that creates uncertainty. And as a result of that, at some point, the market's going to take a rest.
Take a rest?
A rest. It's going to pause, come down, go choppy, go sideways. Markets fluctuate. The good news is the investor is underinvested in U.S. equities, and the better news is stocks are cheap relative to cash flow and dividends that they're paying.
What interests you now as an investment?
Well, we are involved in a variety of areas that we think 10 years, but we invest short term and buy stocks. We're accumulating anything to do with booze on a global basis. People drink. The good news about the Chinese and the Indians is they consume a lot. There's 3 billion new consumers of bourbon, scotch, so the Pernod, the Diageos, the James Beam, the Brown-Formans, the Camparis of the world are in our sweet spot. You drink it anywhere in the world, we follow it. So if you're a drinker, we're going to follow you.
Anything else?
Yes, health and wellness. We think the American population's gotten a little bit heavier, and obesity around the world, and the need to contain healthcare costs, by going and anticipating the healthcare problems by better diet, more exercise, are an important part of what we're looking at. We find companies in the cereal, in the yogurt, in good-for-you type nutritional foods, and diagnostic tests in anticipation of the health issues.
And let me ask you, is there any concern about the Supreme Court ruling on...
No.
No. So either way,
just, whatever it is, whoever's president, we live with that. You know, if Sarkozy goes, and Merkel goes, and Putin goes, which I doubt, and whoever the successor in China, we live on a global basis, and for the next 30, 40, 50 years, the best place to preserve capital is to own cash-producing assets that are inflation indexed.
What do you not like right now?
Well, we don't own bonds. We haven't owned them for the last 10 years. We're not likely, certainly not going to own them for the next 10 years. So U.S. debt is not a high priority for us. We don't like companies that are run by really dumb managements.
I want to talk about companies that you don't like. If there's something specifically you've sold, you've just...
No, we tend to buy something where there is a dynamic in place where the company will harvest the assets by financial engineering. For example, Irene Rosenfeld wound up buying Cadbury. Saraja Carr did a very good job of harvesting the assets of Cadbury. Irene buys these for Kraft, and now she's splitting the company into two parts. The snack food business on one side and the more traditional business on the other. So we're looking at financial engineering, subset transactions, subset deals. So those are simple things. And then aside from you, everyone in the world and everything is aging. So aircraft. And vendors to Boeing, vendors to Airbus, like Rolls-Royce. We particularly like Rolls-Royce. We think that's a very attractive stock for a variety of reasons.
Mario Gabelli, thank you for sharing so many insights with us. We appreciate it.
Delighted to be here.
I'm Rhonda Schaffler. This is Reuters.